Hey everyone, welcome back. It's October 5th, Sunday. Off to a good start of the week, honestly. Ended off last week with, before I even talk about that, like, comment, subscribe if you guys have not. Um, and also my Discord is in the bio. So join the Discord. It's a free community. But yeah, to dive right back into what I said, which is off to a good start of the week. I'm already positive from last week's trade that I closed partially on. I closed about 75 or 80%, or 75 to maybe even 90% of my profits, and then I let the rest run. It was a buy on silver. I was thinking about, I was comparing the difference between buying silver and buying gold, and as you can already tell, the one that had a better risk to reward, right? R to R would be silver. I would have liked it to been gold, but I would not force hopping into gold just because I think I just feel like, trading gold. Excuse me, I'd rather do what's objectively right in the moment rather than thinking with my emotions. Because I've always been one to trade gold more than I would silver. Honestly, silver used to never even be in my watch list, but up until now. So of course I would have liked to last week trade gold more than I did silver, but it's whatever. I got 8% from silver last week, so that's a plus. And yeah, today I want to talk about back testing and journaling. So those two things are both of those two things are key components in what has helped me to become more consistent. I've been able to study and understand the flaws that I had or have in my trading system. Um, you can also identify mental, mental blocks that you've created for yourself, and you can rearrange those mental blocks because not all mental blocks are bad. There's also some mental blocks that are good. For example, if you have a mental block in tra as a trader that is, let's say, bad, a mental block that's bad as a trader would be that you consistently look for new opportunities. So there's a con and there's a pro to that. The con would be that you could run out of equity if you keep keep on looking and also executing on what you see. Now, the pro of that would be that mental block would be, yes, you're actively looking for new opportunities. You don't have to execute on the opportunities that you come across, but at least you're open-minded because if you look at if a 1 to 20 or 1 to 30 risk to reward opportunity comes in front of you, right? You're most likely going to want to take that setup because it might make, I mean, not might, but it probably does make a lot of sense to take that trade instead of just letting it go by. Um, Especially if it just really makes the most sense based off of it fitting within your system or strategy. So backtesting honestly has been a major green flag for me. I've been able to review and see how many trades I've been taking daily, weekly, monthly, and I think that's definitely something that when I started to look out for those things, I started saying, "Hey, I took," and these are realistic um things that has happened. If you go and look back at the way that I was trading from like last November up until now, which is where we're coming up into about a year of me documenting um my journey of trading. So you'll see that at first I'm like trading like maybe I'm taking like 60 trades a week and then I'm like, all right, next week I'm gonna change the amount of trades that I'm taking. So instead of 60, I'll knock it down to about 50. From 50, the following week, I might go back up to like 55, 60, maybe even. And then I'm recognizing this and I'm noticing these things. And I'm like, all right, the next week I have to go to like 40, maybe even 30s. And I think this is as a swing trader. I can't really remember. I mean, like I've always wanted to be a swing trader, so I'm pretty sure this is me wanting to be a swing trader, and I'm still taking 50, 60 trades a week. So I start knocking it down from 40 to 30 to then 30 to 20, and back up to 30, back up to maybe even 40, and then like they just gradually would go down, and then they'll have their incremental peaks at times sometimes certain weeks and then it'll go back down. So now I'm consistently seeing that the amount of trades have gone down less than less than 20, usually less than 15. So definitely less than 20, usually less than 15. And that's something that you want to take note of. Less is usually more. I mean, less is usually more for me, less is usually more for most people. It's almost like having a conversation. It's almost like speaking to the feds. Less is usually more. You have a lawyer for a reason. Um, but yeah, the less you do, the more you stay out of trouble. You can see, I'm looking at my trades last week. It looks like I took 3, 6, that's 9, 10, 11. So 11 trades last week. The week before that, I took 6 trades. Or no. Oh, so last week I took 6, 12, 13, 14, 15, 16, 17. So I took 17 trades last week. I missed that because it was a new month. Uh, the week before that, I took 7, 14, 15, 16, 17, 18 trades. And the week before that is 7, 8, 12, 13. So that goes to show you that when you're journaling, you're back testing, you want to acknowledge what you're doing. You don't want to just go with the moment, go with the flow and almost be like an NPC, right? You don't want to be this type of A. I'm not even gonna say AI because AI refines over time. Like AI is not moving stagnant, and we all know that for the most part. But you want to have this this forward thinking um framework, forward thinking framework, and you want to pick up on those small mistakes that you're making over time. It's almost like breadcrumbs. You just keep on dropping breadcrumbs, and it's not helping your progress. It's actually hurting your progress, especially because if you know about the compound effect, you'll see that the more you pour into certain habits, they return in other aspects of life. So even if you are someone who doesn't, let's say you're someone who doesn't, if you skip reading, right? You skip reading today, you're most likely the chances of you skipping tomorrow, reading tomorrow, is going to be way more likely versus if you were to read today. Um, if you didn't brush your teeth last night, you're most likely not going to brush your teeth the next day. So these small habits is something that you want to pay attention to because the moment you start, when you're gonna sense that, and that's why it's important, and that's why a lot of wealthy people have routines. Like one of the routines that I picked up on somebody, I think it was Jeff Bezos. He said I only wear like white t-shirts or something like that, or it might have been Mark. I don't really remember who it was, but they said I only wear like black t-shirts or white t-shirts. I don't get into the whole like, I wear the same clothes every week or something like that. And when you start thinking on that type of like frequency, it's like, okay, well, excuse me, these people are like, multi-billionaires worth, and the type of, if you listen to the way that they think, and they're not trying to impress anybody. They honestly don't even have to. Um, they're really just locked in, they're focused, they're consistent. They have a good amount of emotional regulation, than most people, clearly. And, they honestly, they like they just have all this aura, right? So studying those types of people and just listening to at least hearing what they have to say, it kind of helps you um just be more of a forward thinker, and that type of advice that they give or perspective that they even share from their personal lives, it definitely radiates um personally into mine. I hope it does for you as well, because these are successful people, and there's no other person to learn from, rather there's no other person that's best to be learned, or there is no other person um that you can learn best from rather than someone who is successful. That was like a tongue twister. I don't know why. But yeah, so that's back testing and journaling. Journaling, you guys already know I use TradeZilla. Um I was at one point using Notion, but Notion doesn't, I'm not sure if they do now, but when I was using it, they didn't have my broker integrated. So I would have to like screenshot and then take it to there, and then I'd have to click in, my risk to reward and stuff like that. But TradeZilla pretty much does everything that I want it to, so that's the main reason why I've been using TradeZilla. Um, oh, another thing. So when you start when you pick up on when you're back testing and journaling, you start to see which commodities, maybe indices, I don't know, maybe Forex. You start to just see which types of securities that you trade do well in your hands, in your um strategy. So whichever one you feel does best probably makes sense, right? To stick with whichever one you feel is best for you. So that's something that I've learned as well. I always wanted to be the one who's just like who has their hands all in all of the different securities. And it was definitely hard to let go of, like, Forex, FX. Um so now I've just been in metals, and so commodities like silver and gold, and then also indices. Indices like NASDAQ, US 30 and S&P 500. Honestly, it just makes more sense because it's easier to determine the directional bias, and then it's pretty simple to catch the move in that direction. Um it's honestly hard to miss the overall direction. Unless price is choppy and prices is in an accumulation phase, then it's definitely going to be a little difficult. But um, other than that, we're on like medium easy mode right now. Um, I got a surprise for you guys, but I'm almost done with the surprise. Most likely next time I make the next video I make and post on YouTube, I'm most likely gonna have it in the thumbnail for you guys to see what the surprise is. Um, but yeah, stay tuned so that you guys don't miss that. I like adjusted the quality. I don't know if this looks better or worse than I had it before. Comment, let me know what you think about it. But um, Also comment, what I want to know what you guys have to say about like what you've learned about your back testing and your journaling. So tell me exactly what you guys think about. Have you back tested? How do you feel about back testing? How do you feel about journaling? Where do you journal? Like what do you use to journal? Um, what does your risk look like? Tell me I want to know what your risk looks like. How much do you risk? Do you risk 1%? Do you risk 2%? Do you think 2% and 1% is too little? Do you think 5 to 10% is more like you? Do you feel like full porting and risking 100% is the best idea for yourself? Comment below what you think about um just what do you think about that? About like risk per trade. Um, I also want to know like how often do you review your past trades? Your winners, your losers. Personally, I'll take about the entire day just thinking about it. Honestly, um, I spend days thinking about the losing trades. I personally focus more on the losing trades than I do the winner trades. And I think I said this before because the winner trades, you know exactly why it was a winning trade. The losing trades, you have to figure out why you lost. You can't just say, I woke up, I seen it hit my stop loss, and I'm going back to sleep and just completely forget about it. Like you can go back to sleep, but when you wake back up, you should at least start looking at like what kill zone did you enter in? Did you even enter into a kill zone time frame? What time zone were you in? Like was it New York, Asian? Was it London session? Were there any news? Like what was the politics looking like? Was it FOMC, CPI, um, NFP? Like what did that look like? What day is it? Is it the first month of Friday? Right? Because now, if it's the first month of, or the first Friday of the month, my bad. Is it the first Friday of the month? Because obviously, if it is, that will correlate to why that might make a little bit more sense. Because we all know about NFP. And then, you also can start understanding, like, okay, when I place this trade, what was I like? What was I doing? Was I kind of tired? Did I wake up a little groggy from London session because it was around like 3, 4 o'clock in the morning and then I wanted to place the trade and go back to sleep? So all of these things you kind of want to take mental notes, but you can also write them down in your notes. Like I have a notes app. We probably all have the notes app if you have iPhone or Android. And honestly, it's great because it's connected with my iCloud's connected with my desktop, so I can open up my Notes app and information on my desktop, and then I can also it's also shared with my phone. So if I want to make a mental note or add a note in my phone, I can just do that, and then boom, it'll just pop right up on my desktop. So just being aware of those things as well that are they're tools that you can use as resources to help you just keep on going forward. Um, because we don't want to be stagnant. We just always want to keep on learning and learning and learning. Excuse me, because if we're not growing, we're dying. We don't want to die. So let's take advantage. Let's take advantage. What is this? Oh yeah. Have you ever back tested a strategy? What did you learn from the process? So have you ever back tested a strategy? So let's say you have an A plus setup, right? You have an A plus and a B plus setup. With your A plus setup, might be you looking at the daily. The B plus setup might be you looking at the 1 hour time frame. So there you have it. You might now with the difference between The way that you treat your A plus setup and the way that you treat your B plus setup, this tells you, and it's in the grade, this tells you that you're not gonna put on the same amount of risk. I I mean, I just don't see how it would make sense to put the same amount of risk that you would risk on your A plus for your B plus setup. Like it doesn't make any sense. So now you have to start making once you start making these mental notes and adding them into the way you trade, into your strategies, it starts to click. And once it starts clicking, then that's when the wheels start turning and your profitability starts going up. So that's where I've been over the past, like, I feel like it's been about a month that the wheels have actually been turning. Because prior to like a month, I was still in that hamster wheel. And it's like I finally stepped off the hamster wheel and things are starting to make sense because it's it's almost like you've been in a simulation. Like most people are in this 95 to 90% of trader mentality where it's a hamster wheel and everybody is just going with the the hey, I'm gonna full port. Okay, I gained maybe a good amount. And then it's like you just do all these, oh, I'm gonna jump from Forex to commodities to indices, back to Forex to commodities to indices. And then I'm gonna do this and that and that and this. So it's like it doesn't make sense to just try and maybe one or two, right? You don't want to have, I mean, I just personal preference, personal preference. But yeah, like, what did you learn in the process? Like, what did you learn about yourself in the process? Are you learning about, is there anything you got better with? Like, did you get better with risk management? Do you now understand the difference between an A plus and a B plus setup? Is there any changes that you would make between your A plus and B plus setup? How do you feel about your A plus and B plus setup? Can you compare your A plus and your B plus setup to this person's A plus and B plus setup? Is there anything that you can take from my A plus, my B plus setup to integrate maybe with your A plus, your B plus setup? Is there certain days that you use your A plus and B plus setup? Does the market have to do a certain thing in order to consider your A plus or B plus setup? All of these minuscule things that you might think are not a big deal. In fact, long term are big deals, and it's a part of the compound effect. So once you start to understand that and just start being more mindful, focused, and challenging your own ideas and journaling and backtesting, that's when you're gonna start seeing changes. So with that being said, I'm going to start sharing my screen. And first things first, what we'll do first is we will let's look at my journal first. So my journal is here. Is that my journal? I hope it is. Has failed to start. Wait, screen sharing has failed to start. Please try again later. Shift to select multiple windows over the shoulder as background, side by side. See if I could do this. Huh. I don't know. I don't know why it's not working. I hope it works. Multiple participants can share simultaneously 1%. Let's see if I can do this again. Ah, okay, it works. Let me see if I just seen something that was honestly interesting. Side by side. Honestly don't know how that looks, but I hope it doesn't look bad. I put side by side. Where's that other thing? As background, over the shoulder. What is over the shoulder? Oh yeah, nah. Side by side presenter layout. I don't want to really mess with it because I don't really know how it looks, and if it looks bad, I would hate that for you guys. All right, so last week you can see that October 1st was well, October 1st was actually on Wednesday last week. So we started off the week um positive, so up 2%, up 2.2%. The next day, so this is Monday. The next day, right? Matter of fact, let's do the I'll take out the calculator. I mean, don't really actually need the calculator, but it's all right. I'll take it out anyways. All right. So we got 2.21, right? Next. So we didn't trade on Tuesday, traded on Wednesday, so that's plus 1.99. It's 4.2. So now we're at 4.2. Then I lost it all on Thursday. You can see I lost it all. So I went from positive 4.2 for the week to negative 4.27 on Thursday, which means all my profits got wiped out. And then I made it back plus more. So I doubled it. Which means, right? So negative 4.27 equals negative 0.07 and then plus 8.49. And I know exactly where I went wrong here. I know what I did wrong. I know what I'm going to do better going forward so that this does not happen again. And so now you can see that it is now, yeah, we're up 8%. So I was came out the gates last week up 8%. Could have been more than that, could have been up, over 10%, but because of this L that I had on Thursday, I had an L day on Thursday. That's the reason why I didn't come out the gates over 10% last week. But that's pretty much it, like you just keep on getting better. Excuse me. Just keep on getting better and understanding like where you're going wrong. Like this one, this day right here, I can tell you exactly why I went wrong. I entered too early instead of waiting for a candle closure. And usually nowadays when well before, let me tell you about how I would respond when I knew that I entered the market sooner than I'd like. So when that would happen before, what I do is I would stay in. I wouldn't get out. Nowadays, when I find myself entering the market sooner than I want, I treat it as I treat it as it should be treated. In my opinion, I just think that, it goes against my belief system. Meaning like it's just not right. I just don't agree with it. If I don't agree with it, then I will remove myself from the position. And that's what I did. Um, because I got in earlier than I wanted to, I removed myself from the position. And I'm glad I did because if I didn't, I would have lost more than I did. So just being honest with yourself, being realistic, taking accountability, which is hard for people. It's hard for people to take accountability. And I'm someone who likes holding myself accountable. So it just keeps on getting easier and easier and easier every single day. So that's why, the compound effect is important. Now, we can take a look at the market. So as you can see, if we go back down here, you can see that I entered around here. I entered right here. Market goes up, and now we're all the way right here. Now, I can give you a live image of how this looks right now too. Just hold on one second. Oh wow. Yeah, silver is just going crazy. I can't lie. Silver is going. all right, so let me just screenshot this and let me send it to myself cause so that you guys can see it. Quick look, you guys should be able to see it when I bring it to quick look. So, um, all right, here, let me share it with you. I don't see the picture. Okay, let's do open with preview. You guys should be able to see it. Boom. Now look at that, right? You guys can see that where silver is on my broker account, and you can see where I got in. So I got in right there, exactly where I told you guys I did. It was right around like 46.30 33.5, right? Got in there, and when price had came up, I don't know if you can see my mouse, but when price came up around here and it created a higher high, or hit, I would reference this as my TP1. So when price hits my TP1, um I would take partial. I wouldn't just take 50% because if price reverses and comes down here, it'll hit my stop loss, and then I'm just completely, you know I would say, what would I say? I would say that I pretty much broke even on a trade that I waited all week. No, I'm taking at least 75%. So, and that's what I did. I took at least 75%. That's why you only see a point oh 0.01 in still running. And I'm gonna continue to let this run, allow this to run until the market tells me that we're no longer bullish. So until the market tells me otherwise that we're no longer bullish, I'm gonna stay in the market. And if I get certain signs like weird volatility in the market that I'm just uncomfortable with, then I'll get out. But yeah. So yeah, that's silver, gold. I mean, it's doing its thing pretty similar to silver, S&P 500. Let's take a look. I haven't really looked at it this today, but I do want the market to fall. Now, the market could be falling. Right now, 1 hour time frame is bearish, and the EMA for the 1 hour is right below where price is. So it's definitely possible for this week for us to get a sell-off. I took a small 0.75% loss on this buy right here. Didn't happen, which is fine. This is actually during the silver trade that I was in. I risked about 3% on the silver trade. It had a higher probability of playing out, which is why I put that amount of risk on it. This 0.75% trade didn't really have that much potential, which is why I only risked about 0.75%, and I was already in the silver trade, so that also gives me a reason to lower my risk. And sometimes I found that I would get ahead of myself when I'm in a winning trade. I'd feel like my ego would just get too far from where it is financially beneficial. But yeah, NQ and ES, or NQ and S&P 500, I definitely want them to do the same type of move and then pick whichever one, gives the best risk to reward. Obviously, I'd be looking for a buy since the daily is bullish. Then we got oil, so I'm not really enthused by oil. But if price comes around here, I might start looking for potential sells to create a lower low. And the thing is, though, that the range that we're currently sitting in is, I believe we actually are bullish, but because of this range right here, like this right here, this, this low and this high, seems like we're pretty bullish, but if you look at the most recent candles, looks like the daily candles are pointing downwards, and we're also below the EMA. So what about Dow Jones? So Dow Jones, I mean, if we look at the 4 hour, I mean, we just looked at daily, so you can see that we're clearly bullish. 4 hour time frame definitely indicates that we're bullish, but look at this. The 1 hour also indicates that we're bullish. There's a good imbalance around here. I definitely think that we're gonna get this filled in, and we'll see where this imbalance takes us. From now until price comes into that, key level, I will continue waiting, and I have my alert set here just in just in time for when it comes to that level, if it does come to that level. And I want you guys to pick up on the fact and notice that I'm saying if, because you never know. Like, price can never come there ever again for years. But yeah. So that is pretty much it. That's all that I'm looking at for this week. And I mean, I guess I could highlight this a light blue. This is blue because I'm still active in it. This is gonna be light blue because I'm not active in it. But I am anticipating something to happen this week. And then do not disturb is just my oil where I don't really feel that comfortable trading it. And that's pretty much it. And I hope you guys like this video. Hope you guys can actually hear me because I see the mic was under. But yeah, excuse me. I hope you guys enjoyed this video. Um, like, comment, subscribe, share with me. What was your best takeaway? Before I go, I'll leave you guys with a quote. So this was an interview with Michael Steinhardt. So he was asked, you mentioned a contrarian mentality, but that type of thinking could have justified trying to pick a top at much lower rates. He says, there's a very important difference between a theoretical contrarian and dealing with it in practical terms. In order to win as a contrarian, you need the right timing and you have to put on a position in the appropriate size. If you do it too small, it's not meaningful. If you do it too big, you can get wiped out. If your timing is slightly off, the process requires courage, commitment, and an understanding of your own psychology. So this is where learning a little bit about how you think, learning a little bit about how you respond, learning a little bit about your behavior patterns that can be adjusted for good. Um, Learning about how much trades you take per day, per week, per month. Um, Learning which or which setups are best for X percent, B percent, and C percent. So that's how you can start turning over your losses to winners or minimizing your risks or minimizing your losses and maximizing your winners. But that's that's all I have for today, and I hope you guys learned something interesting today, and I appreciate you guys for watching. Join my free community. The Discord link is in the description. Like, comment, subscribe, and I'll see you guys next time. Have a good one.